The UK has a new Prime Minister, but currency markets don't care. We're seeing the pound trading pretty much at its worst levels against the US dollar since the mid-1980s. Is the new regime going to change the pound's fortunes round? Are we going to see a recovery? Or actually, are we going to get to the point where a pound ends up being worth just $1 US? In this video, we'll go through the pros and cons, then we'll jump on the platform and see what the trade might be for pound against the dollar. Hello, I'm David Jones from Capital.com. I thought we'd do an update on the pound against the dollar. We did the euro earlier in the week, talking about the big slide that we've seen there against the dollar, even bigger slide for the pound against the dollar. So I thought, let's do an update. You know, we're back down almost to 1985 levels for pound against the dollar. We've got a new Prime Minister in the UK after the leadership race, hustings, whatever they were, that seemed to last about 5 years. So Liz Truss is the new UK Prime Minister. Any change as far as markets are concerned from a currency point of view? Not so far. So I thought, let's do an update. Let's take a look at it, have a look at the recent news, look at the levels to watch, then jump on the platform and set a trade up here. As usual, if you're watching this and you haven't subscribed, if you could click on subscribe, does help support the channel. It means we can continue to push out lots of different content on the various markets that we cover. And of course, every Friday at 2:30, I do a live stream direct from our YouTube channel. If you're subscribed with the alarm bell button pushed, you get a message of YouTube just as we're about to go live. Right, let's get into it and catch up with some of this news on the pound against the dollar in a bit more detail. So just to recap, we looked at the euro earlier this week. The euro for the year is down 13%. Again, against the US dollar, the pound has fared even worse. So for 2022 to date, the pound is down by about 15% against the US dollar. So it is a sizable slide. We are trading around the levels seen in March 2020. All right, so it sort of spiked down to around 114 back then, and then a subsequent recovery. We're back down there. And those levels are the lowest since 1985. So we are pretty near a, 37-year low for the pound against the dollar. So I think 114 is a big level to watch. We'll look at the levels to watch in a minute. I think if you start falling below there, we could see a more accelerated sell-off. And what's the story behind this? Well, the bulk of it is a US dollar story. You know, the US dollar continues its strength even this week. You know, we've seen a great run for the dollar over almost 18 months now. This year it's been seen as a safe haven because of the situation with Russia invading Ukraine. We've seen it as almost acting as an inflation hedge. You know, it's definitely outperformed the likes of gold, for example, as somewhere to put your cash to try and stave off at least some of the inflation. So it's been something of a perfect storm for the US dollar. US dollar strength means that other currencies, the euro and of course the pound, are going to weaken. But there's a bit more than that as well. You know, we do have a fairly weak outlook for the UK economy, to say the least. We have various investment banks painting a really gloomy picture for next year. For example, Goldman Sachs warning that inflation could hit 22% in the UK next year, which really is a massive number. I do wonder, though, is it all getting a bit too pessimistic? Are we at peak pessimism for all of this? I'm not saying that we're going to see suddenly the pound back at 140, but I wonder, down at these levels, with the dollar having had such a good run, with the likes of the pound getting badly beaten up, are we getting sucked into a pessimism vortex where we're expecting things to just get worse and worse? Let's not forget that markets are continuing to look ahead. So I do wonder if perhaps we see something of a turnaround in the short to medium term. Saying that, I'd still favour going short into any rallies. So before we look at some trades, let's talk about some of the levels to watch. So on the upside, I mean, there's loads of resistance levels, loads of barriers to any recovery. 119, the 26th of August high, the absolute high for August set earlier in the month, 123. So even if the market rallies, 800 points from here, there's major barriers from just last month. On the downside, the low so far, 114.40. The low from 2020 and that 37-year low, 114.10. And I think if we start breaking out down through the 114s, we could see an accelerated sell-off. Anyway, let's jump on the charts and see what the trade might be. So here we are for the bigger picture view for pound against the dollar. You can see it trading down to those March 2020 lows. They were in around 114, 114.10, something like that. So we're back down to this big level. And I think if that level breaks, we could well see a sharper sell-off. Let's flip it over to the dailies. So the pound peaked May, June of 2021, up around 142. And since then, you can see the size of the decline, a decline which has accelerated since February of this year. So maybe look something like that. So at the moment, to threaten that downtrend line, it would take a rally through about 120 to suggest that trend that's been going for much of this year is coming to an end. So it would take quite the rally still to end that trend line. Let's take a look at the RSI. So not surprising, fairly oversold, pretty oversold. It's been oversold off and on since the middle of August. Again, reinforcing the lesson, just because an RSI is oversold or overbought doesn't mean the market's going to turn around. The market can stay at an extreme longer than the RSI it can. So looking at it now, this is the most oversold the market's been. We've got to go back to April of this year. So, perhaps it is overstretched and we're due a bounce, but we're not seeing it in the market. Look at the rally a couple of days ago. The market did rally from 114.40 up to 115.60. So we saw a 120 point rally, but it didn't exactly stay very long. It's turned around and given up those gains really quickly. And that's really been the theme for much of this year. So what's the trade here? I think there are a couple of things. So first of all, I wouldn't want to be a buyer yet, because it's only 2 days ago this market made its lowest price since March 2020. So for me, the trend is still down. So I think there's a couple of trading ideas here. First of all, we wait for a bigger rally. Do we get a rally back up to where it was the end of August, around 118? And that's an opportunity to sell short. So that's one idea. But for me, I think the trade I'm going to do is basically a breakout or breakdown trade. If the market breaks below, let's take it back to that weekly chart. If the market breaks below that 114 level from March, I think it could open up a sharper move lower. So that's the order I'm going to place. So I'm going to place an order that sits there below 114. If the market breaks there, then go short. So the only question is, where's my stop going to go? Perhaps above 116. It's a volatile market, need to give it room to move around. Let me set that trade up. Right, I'm ready to go. So the market at the moment is trading at 114.78. I am going to sell 14,000 if the price drops to 113.90. So if it drops below those March 2020 lows, if that order gets filled, put a stop in at 116.50. And I'm hoping that means I don't get taken out in any volatility following the break. And it's for the risk of around £300, our usual risk on these trades. So it's an order that's just going to sit there underneath these lows. If the market breaks lower, then I'll be short. Let's put that order in. So the order's in, selling 14,000 of pound against the dollar at 113.90. So a reasonably straightforward trading idea, just jumping on the momentum if we see this thing move to its lowest levels since the mid 1980s. We are at a point where there's an awful lot of pessimism around. So we could well see some strong rallies from being oversold. But I think if we break that level, I do wonder if we'll see a lot more pressure on the pound. Let's see how it works out. It's conditional on the market breaking down. I just have to be patient and see if this market does continue to move lower. That's it for this update. Pound against the dollar, still weak. No bounce effect from the new Prime Minister and new cabinet just yet. Let's see what happens. Interesting to see if rallies once again prove to be selling opportunities. That's definitely the way I'm leading. But as usual, we'll do an update. We'll come back. We'll have another look. But for now, from me, David Jones and Capital.com, we'll leave things there. Good luck with your trading. For more trading videos just like this, please subscribe to our channel.